Yo, what's good everyone? Welcome back to another video inside of part 8 discussing all things price action related. Now, today's video we're going to be talking about Confluence Trading, what the hell is Confluence Trading, and how to use it to identify and take advantage of high probability setups. So, Confluence Trading is putting together multiple confirmations to build a case to why a trade has a high probability of going in your favor. So, our job as traders is to identify and take advantage of these high probability setups. What makes a trade a high probability setup? I believe that these high probability setups have at least 4 confluences, but the more the better. So, like I said, you're just building a case as to why, this trade has a very good chance of doing what you expect it to do. Now, confluences that you can use, confluences that I use really are like, the trend, you have market patterns, candlestick patterns, support and resistance, market structure. And then the last two I have listed here are, confluences that I've used in the past, but I do not use any longer. And I'm going to discuss these, at a later part in the course. I'm not going to spend a lot of time on them because, like I said, I don't use them. But I do know a lot of people use them and a lot of people love them and like that's like their bread and butter, which, hey, that's fine. I just personally don't use them. And just understand that, Confluence Trading is using whatever tools or indicators that you deem necessary to identify a high probability setup. And just understand that, everyone's going to have different criteria for what that means. For example, some people might use RSIs and divergence and volumes and just all kinds of different indicators and Elliott waves and just like all kinds of stuff. And that's fine. If that's you, cool, bro. That's awesome. All right. But I don't do that. So I'm not even going to talk about indicators, right? Just because I don't use them, and that would be like a disservice to you guys if I'm sitting here trying to tell you guys how to use something that I don't even use in my own trading. So if that's you guys, if you want to learn how to use all that shit, understand that it's not necessary. But if you want to, man, go to YouTube and do a little research and find somebody who actually uses that stuff and is really profitable trading that, and then just follow them, okay? But I don't use indicators or anything like that. I literally just use, like you guys know, I use support and resistance, market structure, market patterns, and then candlestick patterns. That's it. Like, it's very basic. So, like I said, if the setup doesn't have at least 4 confluences, I will not take the trade. I don't care if I could have made a gazillion billion dollars. I don't care. Okay. Actually, I probably would care a little bit. Like, that would hurt. But I just don't take the trade if there's not at least 4 confluences. Something that my mentor does is he changes his risk percentage based on the number of confluences he has on any given trade. But I do not do that. I simply risk 1% every single trade. Doesn't matter if I have 4 confluences or 19, which I don't have 19 confluences, but you get what I'm saying. And that is just something you can consider. So, for example, like for him, if he has, I think like 2 to 3 confluences, he risks like 0.5% to 1%. If he has, 4 to 5 confluences, he risks, 2 to 3%. And if he has more than 5, then it's like at max 4%, something like that per any given trade. So we're going to identify some examples here. I hope you guys enjoy my drawings. I really, really worked hard on them, so don't bash them. The first example we have, a bullish trend. Obviously, we know that is a higher high, higher low, higher high, higher low. We have an extension through this level of support and resistance. We have a break and retest market pattern. Break, retest, pull back into the support and resistance. And then at the level of support and resistance, we have a bullish engulfing candle print at this support and resistance. So there's 4 confluences right there. Bullish trend, we have support and resistance, we have a break and retest market pattern, and a bullish engulfing candlestick pattern. Those are 4 confluences. Give me that trade. Okay. The next trade, as you can see, we have a bearish trend. Boom, lower high, lower low. We have this counter trend pulling up on the major trend. So we have the bearish trend. We have a double top pattern form. We have 1, 2 touches. Okay. And then the double top is forming at a major support and resistance zone. And then as well as a bearish variation printing at that support and resistance zone. Obviously, by my drawing, looks awesome. Like I said, give me that setup all day. There's 4 confluences. Yep, I'm taking that. And then the last trade, I just tried to get a little wild with that one. So we had we have a reverse head and shoulders. We have a left shoulder, head, right shoulder. So that means price has flipped to be bullish because we broke the neckline. And then also, the neckline is a major support and resistance zone, as well as a bullish engulfing printing at this break and retest of the neckline. I mean, there's like 5, maybe 6 confluences in this trade. Like I said, Give me that. Okay, we're taking all three of these setups because they have multiple confluences. Now, that's pretty much it for Confluence trading. So what I'm going to do now is I'm going to pause this video and I'm going to meet you guys over on the charts, and we're going to go and identify different setups, and then just count the different levels of confluences that are on these given trades. So I'm going to pause this and I'll see you over there. All right, so jumping over to the charts, we're going to use the example that we used in the previous video, this move that I got on Tuesday, and I just want to show you kind of the confluences that I had going into this trade and how I used those to take advantage. Now, so we know that on the daily we had a daily bearish trend and also the previous day closed bearish, so we have bearish momentum there. And then obviously we had a 4-hour bearish trend, and then the hourly was also bearish. Some people count those as different confluences, but honestly, when it regards the trend, I typically use those as different confluences because I don't know, I just like to. But if you wanted to, that means this trade had 6 confluences. I personally don't do that, so it only had 4. But I do take notice of these trends. So I have daily bearish trend, bearish momentum, 4-hour bearish trend. The hourly had a bearish trend, and then also on this hourly time frame, we had the hourly break and retest of support and resistance, which happened right here. We had a break, the retest happened, and it's also retesting a daily level of support and resistance. And then also at that level, we had an hourly bearish engulfing candlestick pattern. That's 3 confluences. And then also, if we drop down to the 15-minute, we have, where did my text box go? There it is. Also on this 15-minute, just continuing with structure, ignore the candles for now. I'm going to draw literally what is right here. Okay, so we have boom. So then we have this, and then it looks like something like that. Okay, so if we have structure that looks something like this, we know that we're bearish, right? And we're looking for sells. And remember, we have 2 different areas that we can look for sells. We can either take sells off the pullback to this level of support and resistance or market structure, or we can get in on the breakout to go down and create fresh lows. So that is literally what I did right here. It's the exact same. So we have this extension, this is the pullback up into here, and then we have the extension lower, which is right here. We have a slight pullback to here, not quite all the way up into that level. So I'm either waiting for price to pull it back into here to take sells, which is right here, or I'm just taking the pure breakout, which is what I did. So I took breakout of market structure to go on and create new lows inside of this bearish trend that is also inside of this bearish trend, and then inside of this bearish trend, and inside of this bearish trend. So that is how you're using multiple confluences to find these grade A, really, really nice setups. And it's just all over the place, man. If you just go through, and it helped me early on to, just grab the text box and just label, what are you looking at? What do we have right now? And that's all I did. I went to the daily. I typed, we had a daily bearish trend, also with bearish momentum from the previous day. And then I had, a 4-hour bearish trend, an hourly bearish trend. On the hour, we had a break and retest of support and resistance and the major daily level. We had a bearish engulfing on the hourly, which was right here. And then also with that continuation, we would be riding it down to the next level. We got a little bit of choppiness, 15-minute. Right when London opened, we had a breakout going for fresh new lows. That's literally it. That's Confluence Trading. And that is how, you can use it to your advantage to find these grade A high probability setups and to take advantage of these to find probability in your own trading. That is all for this video, guys. I hope you enjoyed it, and I will see you in the next one. Peace.